Welcome to the press conference call for the February edition of the Philadelphia Fed's Business Outlook Survey for Manufacturing. Today we will learn what manufacturers had to say about business activity for the month of February. I'm Danielle Mazzone, Media Relations Representative at the Federal Reserve Bank of Philadelphia, and I am joined by Senior Economic Analyst Michael Bolin. Michael will start our conversation with a quick overview of this month's survey.
Yes, our survey's index for general economic activity fell slightly, more than a point to 5.2. The index for future activity fell 21 points to 29.7. Nonetheless, both indexes are still reading as positive signs for the economy. Details in the survey were positive as well. Price pressures remain subdued, and firms are optimistic about both future new orders and employment trends. In sum, the overall picture from the survey is consistent with ongoing but modest expansion in our region's manufacturing sector.
So we have Richard Long from Reuters on the phone. Richard, do you have questions for Michael?
Sorry, I was on mute. Excuse me. My question, is there much in terms of in this month's survey that the survey company was saying anything about lower energy costs and the stronger dollar and how it's affecting the businesses?
This survey didn't address energy costs. Our previous special questions did, and we are seeing from our participants that they are expecting to and already enjoying lower costs of production from energy, and it doesn't seem to really be affecting demand yet. We expect in Pennsylvania lower energy prices as producers to hurt some of the shale gas extraction, but that has not really affected manufacturing yet.
How about a stronger dollar?
A stronger dollar, it's not clear that we are as big an exporter, so it's going to really hurt right now. We don't have many of our respondents telling us that's a concern.
Yeah. There's also was a very big decline in the futures outlook this month, coupled with a much more modest drop in the headline number. What is historically when you have such a steep decline in the futures outlook in terms of how that affects the current outlook or the headline reading in the coming months? Is there any correlation between the two?
Sure. There's certainly some concern when numbers drop as much as they did, but as economists we were looking for long-term averages. It's roughly at 30, which is a long-term average for the future index when we're in an expansion. So it's really right exactly at the number we expect when the economy is growing at a steady pace.
So that number that we saw a couple of months ago back in November, that's really an outlier.
That was certainly unsustainable. We've never seen numbers stay high for 6 months at that type of level. That's what it really would have taken. Moving back to normal range is actually comforting, I think.
Right. Okay.
Anything else, Richard?
Nope. Those are all the questions I have.
Okay, thank you very much. And the next release of the Manufacturing Business Outlook Survey will happen on March 19th.